Mayuresh Joshi is with us, Head of Equity Research at William O'Neill. Mayuresh, good to have you with us here. Thank you very much. The debate continues in terms of what the RBI has done, what it means. Perhaps we had, for example, KK Mistry of HDFC with us earlier today, who said, when I asked him whether he read the policy as perhaps being incrementally hawkish, he said, maybe the RBI has possibly left the room open for one more hike, and that is the hawkish element of it. Otherwise, he didn't see it as such. But from a market standpoint, what did you make, Mayuresh?
Afternoon, Prashant. First of all, wishing you, Rima, and the entire team at TV18 a very happy 23rd. You guys have been doing a wonderful job. Wishing many more and much more success coming your way. As far as the RBI policy is concerned, yes, I think there have been a couple of viewpoints on this. One hawkish and one is quite neutral at this point. The statements surrounding inflation is something that the markets are probably perturbed about. Till what extent will more hikes come through is what the market is fearing at this point of time. But again, I think if you probably read between the lines, inflation is way behind us. At least the peak inflation is what the governor has put forth. With food inflation expected to come down, the large expectations are that 25 bips to 50 bips, I think that would probably be the hikes that we are probably looking at, unless data probably worsens off. So to that extent, I think the uncertainty related to the inflationary pressures persisting for some time and rate hikes expected to come through, albeit at a lower pace, is something that is perturbing the market. But my own sense is that markets will gestate this, Prashant, maybe in the next few trading sessions, and we'll move ahead as we go along and concentrate more on earnings where strong sectors will probably still stand out over the next few quarters.
You know, Mayuresh, when we were just chatting with Julius Baer, Rupen Rajguru, he indicated that perhaps in the next few months, two-wheelers may do well because there are signs of a rural recovery. Though structurally, they prefer CVs as well as passenger vehicles. My question is more about the near term, the next 3 or 4 months. Any tactical recommendations, some in, some out, just not the structural story, but just tactically, any recommendations?
So afternoon, Rima, I think if you're probably talking about our expect to anticipate what probably happens within the auto and the auto universe, I think a large part of the move has probably taken place. But I think a few of the strong stocks that we probably follow at O'Neill, something like TVS Motor is an example, has still continued its upward trajectory. Strong volume growth, they've probably been able to pass through their prices. So margins have probably taken a hit. The new launches that they've done specifically in the two-wheeler EV stable and the price hikes that they've continued, I think that can probably persist if one probably takes an immediate short-term view. But our own sense is that you can probably look at a few of these larger FMCG stocks like HUL is nearing its pivot level at this point of time. Large expectation again of rural recovery expected to take place in Q4. And I think a few of these FMCG players will move first as discretionary spending starts coming back. They'll obviously also have the tailwind in terms of lower input costs, edible oil prices, palm fatty prices. You've probably seen food derivatives and even packaging costs go down. So to that extent, I think the product portfolio that they have, the expectations of volumes improving Q4 onwards and sitting on better margins with input costs going down. I think a few of these larger FMCG companies can be tactical plays from the next 3 to 4 months perspective.
Mayuresh, everyone talks about travel, revenge theme, and that's the entire pocket has done exceedingly well in 2021. Do you think next year could be, 2022, do you think next year could be just as strong for the hotel names, for the hospitality sector, or the allied sectors like VIP, Safari, that entire block?
Yeah, I think, Rima, I think the numbers will still come out to be very, very strong. I think Q3 is going to be one of the strongest quarters for everything related to hospitality. I think hotel stocks, luggage stocks, and the likes of it. But to a large extent, when you roll over numbers to FY24 and 25, you'll already be sitting on a very heavy base of this year's or the current year's financials. So I think to keep on outmeeting that at the proportion which they have done this year out of the unlock period or out of the COVID period that they're coming out of, I think the valuation stack up is now going to look very, very expensive for this entire pack. So we liked a few stories within this, a few luggage makers, we like Indian hotels from the hotel space, but I think they've met their targets and to a large extent, we've tried to put in a reasonable amount of growth estimates for 24-25 as well. So I think numbers will keep on coming, in my opinion. But you have to be very, very specific within the spaces itself. In the same breath, our own sense at O'Neill probably points out, and this has been a much talked about sector, capital goods. But within this, I think a few of the infra-related stocks and a few capital good companies, in our opinion, can continue doing well, even if the base is larger, because more and more heavier orders, larger orders with better margins are coming through. Execution period is improving. Private capex, incidentally, has surpassed the pre-COVID levels as well. So I think there are a lot of tailwinds for this sector, even if it has moved significantly over the past.
All right. Mayuresh, we'll leave it there. A good conversation as always. Really appreciate your time here on CNBC TV 18.